Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we saw more strong gains for the major indexes.
Yeah, Ali, it was a really nice day once again. Still continuing that rally attempt. Want to take a look at a few stocks nearby points: Paylocity, on Semiconductor, and Neurocrine Biosciences.
We'll check out those charts, but first let's take a look at the major indexes today. The Nasdaq up 3.3%, leading along with the Russell 2000 also up about 3.3% on the day, followed by the S&P 500 up some 3.1%, and the Dow up 2.8% today. So we've been able to put together a couple of days of strength here, Ed, but it still seems a little too early to get too excited at this point.
Yeah, I mean, it's certainly nice to see the market actually rally nicely for 2 straight days, but all the major indexes are still below their 21-day moving averages. So we still haven't, way too soon to say a follow-through day. Even if we do get a follow-through day, that might just mean that we have a tradable rally up to the 50-day or the 200-day line. Investors should be encouraged and paying close attention, but not getting too excited, too aggressive, because there's a long way to go to really feel confident in this rally.
Right. I mean, we could probably pull up the tape, but I remember going back to late June. I mean, we were a little bit skeptical at that time, but we were above the 21-day at that point.
Yeah.
We're not even above the 21-day line yet. But is there something to be said about the quality and or quantity of potentially actionable stocks underneath the surface that are making this time maybe feel a little bit different? I know we've been at those oversold levels, so a bounce was somewhat expected. Now we just got to see how long that bounce will last.
But I think you make a really good point about the leading stocks. The major averages, they're still below the 21-day line, but there are a number of stocks that are breaking out or flirting with buy points or setting up to be at buy points. So you look at the leading stocks and you go, hey, this looks pretty interesting. So investors should definitely be paying attention, definitely be building up their watch list. If we see some more market strength, a lot of these will definitely go if they haven't already.
Mm-hmm. Let's also take a look at the S&P 500 as well. It's at a zero there to get that pulled up in MarketSmith. So also seeing a notable bounce here after that undercut of those mid-June lows, but not by much. Do you think that this 21-day line could pose as resistance here, or is it still too early in this bounce to be warning that potential?
I mean, getting above that level would be nice, and so we could hit resistance, or you could also see in June we hit resistance there a couple of times, even though we got above it. So we could go above it and still sort of struggle to go higher. I mean, we'll see. It's one of many. There's so many resistance levels, but it would be nice to see it move above that. Let's put it that way.
All right. We will keep an eye out for that. Let's also take a look at 0DJIA. That is the Dow Jones Industrial Average, getting back above that 30,000 mark. And also the Russell 2000. Bit of an interesting story here. It's above the 21-day, and also it was able to hold up a little bit better in recent sessions, so it's a bit further along in its own rally attempt.
Yeah, it's leading the way right now, and you could argue, this didn't undercut the last few days, and so, somebody might be saying, well, this is a follow-through day, right? But, the history shows one reason is that follow-through days that don't include one of the major indexes, especially the S&P and Nasdaq, just don't have a great record of success. Right. And so this isn't something that's going to change our market direction. It's definitely a positive sign, right, to have the small caps and say the mid caps sort of rebounding like this. So definitely positive, but
we'll take it.
We'll take it. We'll take it, but we're not going to take it all the way. It's still a rally attempt. It's still a market in correction, is what we're saying right now.
Mm-hmm. And let's also take a look at the 10-year Treasury yield here, TNX. Looks like, is this what we're seeing here, Ed?
Well, that's a bit of a screwy, because it actually fell 15 basis points yesterday.
Right.
What it did, so it fell about 3 basis points a day for us to 3.62. And it basically, it's hit resistance at it's found support at the 21-day line. Now, this is really key in both days, the last 2 days. So this is important. The yields coming down and the dollar coming down, very, very
Right.
closely related, in aspects. Those are things that are definitely probably helping the market rally. And some of the reasons why the yields and the dollar are coming down is because maybe hopes that the Fed will ease up a little bit for various reasons. Maybe, there was a job openings fell a lot. There's concerns around the world that the Fed tightening is too much. I will note that the actual market pricing in of rate hikes hasn't really changed for the next couple of meetings. They're still expecting a 75 basis point hike in November. They're still expecting 50 basis points. Now we have the jobs report on Friday. We have the CPI. There's a lot of time. But right now, there's more hopes rather than real hard evidence that the Fed is going to slow down.
Yeah, we'll have to see what the reaction is like to those key reports later this week. Yeah, yesterday's bar, that was throwing me off a little bit yesterday.
Yeah, it was a little odd. Wait a second.
All right, moving on. Let's take a look at some watch list stocks, shall we? Like Paylocity, PCTY, setting up a trend line buy point just above the 250 mark. A turnaround in the enterprise software area with a strong gain today, up 3.6%. Volume behind the move. It's also seen some volume on the selling days within this space, but recently it's tried to have the upside volume overtake that of the downside, and you can see that on a weekly chart, the blue volume in this current base structure.
Yeah, so that trend is improving a little bit, and you can see that on a weekly. While the down volume was higher, it wasn't like crazy high at least on a weekly basis. I mean, this came from an earnings gap. It did back off from the earnings gap, sort of gave up a lot of the gains from the earnings gap aspect itself. But honestly, it's a bear market. What are you going to do? And you look at that relative strength line, it did pretty well. It's at a new high. You have that trend line. It was basically flirting right around that. You could probably use a high from last week or so, or September, I think, that right there. And it closed just below that level. Actually it was last week I think we were using, but it's whatever you want to use in there. So there's a lot of nice aspects, nice growth, accelerating growth. I don't know if that can continue. You look at the estimates and it's supposed to slow down. It just started the new fiscal year, but it's doing quite well, certainly compared to any software names that I can think of.
And yeah, that's going to be interesting. Are we going to continue to see more software stocks perk back up? Because it's been all about the energy trade and commodity related stocks for the majority of 2022. We haven't really been focusing a lot on anything in software, but this is a growthier area of the market. So to see it holding up how it is, one of those potentially positive signs for the market.
Yeah, absolutely.
All right, next on our list, on Semiconductor, another area of the market that it's been a little interesting to see the rotation of leadership in. NVIDIA, AMD, really down in the dumps, but it's been up to stocks like on Semiconductor to take on that leadership mantle in the sector, and we're seeing on Semi get back above its 50-day line today, up over 6%. This did not have strong volume behind that 50-day retake today, though, Ed.
No, it did not. I will say that I think I was looking at this about half an hour ago, and the volume was pretty light, like 35%, 40% down. Maybe I'm getting it wrong. So it seemed to have perked up near the end of the day. Gotten above the 50-day line. You could probably draw a new trend line that touches that other high. So it's probably right around a trend line. The 69 area, there was a lot of trading that sort of went along there. There was actually, while we have Market Smith marks another chart, there's basically a handle buy point that was right around 69 as well. I mean, it just shows you that there was a lot of trading around those levels. So you see any more strength, especially if there's volume, you could argue that's an early entry. While this is not a calm consolidation in the last few weeks, it's much shallower than the prior wild whipsaw action of the prior consolidation. Sometimes that happens. Sometimes you see this big, deep consolidation, and then you set up just above, just below, just to the side. This is sort of to the side.
And that RS line looks pretty calm.
You're right. That's a very good point. So again, if the market could just, calm down or start trending higher a little bit, that would be with a lot of these names, you would think that it's a little bit like that balloon kind of thing being pushed down. I don't know if this is the one, but it's definitely one that people should be looking at pretty closely.
Mm-hmm. And last but not least, in BIX, we're also still keeping tabs on biotech stocks. So in BIX with an RS line, blue dot on the weekly chart here, did stage a breakout today, closed off of its intraday highs, but still up about 2.4% in some strong volume. This chart may be slightly delayed, but headed into the closing range here at 35%, Ed. Would be nice to see that a little bit stronger on this breakout try.
Yeah, breakouts have not done great in the past year. I mean, it's just hard to do that. The market backed off a little bit, not this much. We only backed off a little bit. I mean, you could have argued that there was early entries already the prior couple of
Right.
days. I mean, it has moved a lot. Like if because Friday isn't in there, you can't look at the weekly bar and have that in there. But if you take it from Thursday's low and sort of did the range from there, you could,
Right.
we're pretty much at the high of that range. And so, the trend still looks pretty positive, but this is one reason why breakouts are just tricky. And if you do buy a breakout, you want to get as close as possible. I will say that this base is very tight. There's only about like a 9% deep base, which makes it a little easier. So it ran up from the bottom of the base, but it didn't run that far either. It's which gives you a little confidence. Like if it did fall back to the 50-day line, which would not be fun at all, it's not a crazy plunge from these levels, probably about
Mm-hmm.
5%.
Yeah, and this is an interesting example of how prior resistance area at a nice round number at 100 here, as it formed this prior base, hit its head on that level or around it quite a few times, was able to burst above it, and then that turned into support for the stock in the recent base structure. So now it can 110 be that next level that it can get above and stay above. It's mighty close to that. So another one that we're watching. Thank you so much, Ed. And NBIX is a stock on IBD's leaderboard. So to hear from the team about their thoughts on not only this leaderboard name, but others in the portfolio, make sure you check out our scorecard webinar happening in about 15 minutes. Go to leaderboard.investors.com for all the details on that, where we will be walking through performance for the month of September and talking about some of the stocks that are on our watch list now. So we will see you soon for that. Thanks again, Ed, and thanks everyone for tuning in. We'll see you back here tomorrow.